right now on Fox 5 News.
So how did we get from point A to point B?
Well, for many of us, grasping what the housing market has to do with Wall Street is a big stretch.
That's true. So Fox 5 business analyst Lisa Murphy joins us once again to try to explain it all, put it all in perspective. Lisa.
I'm doing the best I can, and it's getting really important to understand exactly what's happening, because it sounds like we, as in the taxpayers, have gotten a little closer to owning $700 billion worth of mortgage-backed securities. And while lawmakers hammer out the details, a lot of us are left wondering what it all means, starting with exactly what is a mortgage-backed security.
In today's mortgage industry, home loans are often packaged together and converted into financial products called mortgage-backed securities.
Sounds simple, but the mechanics of the mortgage market can get pretty complicated. Here's a super simple breakdown. When a homeowner takes out a mortgage from a bank, he or she is responsible for paying it back with interest. Most banks sell their mortgages to Wall Street, which allows them to go back out and make more mortgages. Wall Street pays for them up front and gets the mortgage payments made by the homeowner in return. Investment banks accumulate hundreds of millions of these mortgages, and when they have the right amount and right mix, they make them into bonds. And these are what are called mortgage-backed securities. Wall Street can tailor the bonds to each investor's needs. Buyers include mutual funds, pensions, university endowments, and large foundations. Over time, the bonds can change based on the behavior of the underlying mortgages. When mortgage payments don't get made, there's no money to go out to bonds and the bondholders who own them. But mortgage-backed securities can be structured in a way that gives some bonds priority over others. Good for some investors, but really bad for others. In this example, mortgage payments go to Bond A first, then Bond B, and then Bond C. When mortgage payments are missed, Bond A investors get what they expected, but Bond B investors get less, and Bond C investors, well, they get nothing.
It's the Bond Bs and the Bond Cs that investment banks can't sell these days, and the worse the housing crisis gets, the less those bonds are worth. The Treasury wants to buy those bonds as soon as possible to free up the banks to continue business as usual. If they don't, you could see more investment banks go under. Well, that is a lot to digest all in one sitting. And if you still have questions about mortgage-backed securities, you can watch this again on our website and get more information on the mortgage mess at myfoxny.com.
I want to be a Bond A and get my cash.
I'm telling you.
Well, the Bond A holders are pretty happy, yeah. I mean, that's the thing, is that no one anticipated, when they create these deals, they slice and dice up all these mortgages in there, and they assume, based on probability and statistics and based on behavior in the past, that they're going to see certain payment characteristics. Now, what happened is a bunch of people just can't pay back their mortgages, people that no one ever expected wouldn't be able to, because we're all getting hit really hard. So, a lot of endowments, a lot of pension funds, a lot of us own these things without even realizing it.
All right, well, I'm going to the website to learn more about this. MyFox.
That was a very cool graphic. Thank you, Lisa.
Thanks, guys.
Thank you, Lisa.
The trickle-down effect of this entire mess is already being felt here in our area.
Fox 5's Giovanna Deerpick shows us how some people with perfectly good credit are now finding it tougher to get financial help.
While all that wrangling over the $700 billion bailout plan may have seemed far removed from your everyday life, everyday people, and some you might not expect, are already feeling the effects of the credit crunch.
It's a Ripley's Believe It or Not for me. I mean, I'm just still filled with disbelief about this whole thing.
Deborah Morrison thought she'd have no problem getting a mortgage for the second home she wanted in Passaic County.
A FICO score of 800, plenty of assets, good job, credit.
But she was denied. Two lenders didn't like the fact that she hadn't filed her 2007 taxes yet. Another had a problem with the appraisal value on her home. And she had everything in place. After all, she's a certified financial planner. Carolyn and Valerie Messina are licensed mortgage bankers who in the process counsel people on their credit. These days, they say nothing surprises them.
1 out of 2 people are being turned down for one of the 4 reasons. It's credit, income, assets, and property.
Those borrowers who are getting approved are waiting extra long and are having to provide extra paperwork. Sherez Khan is going on 5 months trying to get his home refinanced.
Every time they ask for new bank statements, new credit report, everything is new documents.
Since tightening credit chokes off business expansion, New Jersey lawmakers are trying to stop the bleeding and jumpstart spending. They're hoping to pass a 7-bill package that would loosen the state's corporate laws and make New Jersey more competitive and more business friendly.
What may have gone through, rubber stamped through 18 months ago, it's not happening today.
Morrison still can't believe she's caught in the credit crunch, and she's trying again with another lender.
Now, all of a sudden, it's like me right in the middle of it. I can't ignore it anymore. It's like totally right here. And it's like, if it's right here for me with those criteria, it's right here for a lot of middle America.
And New Jersey lawmakers will be considering 2 other bills related to the economy. One would teach high school students about personal finance, and the second would provide job training for those people who've been recently laid off. From Secaucus, Giovanna Dierpick, Fox 5 News.